So we're heading into the Thanksgiving weekend here in the US, and I thought I'd take one final look at the markets before I take a few day break, looking at the VIX. Now this chart of the VIX Volatility Index is, as of the last time that I pulled it up and shared a video with you. So I'm going to update the analysis and sort of just unravel and show you what I'm finding as I go here. All right, so first we can see that the VIX has retraced nearly all of the run-up from this August 12th low. It's therefore made these two dashed lines here a little bit less useful. I'm going to remove the top one, but I'm going to keep the bottom one because it could still be resistance if compiled with another factor if the VIX bounces. All right, we can also see that we broke below this support. I use pink for support, and there are resistance levels that we can now bring in. But before I do that, I'm going to kind of squish the chart in for more data so you can see more history. So with the VIX falling, it means that there's more likely to be upside in broad markets, the S&P, the Dow, etc. But that is unlikely to just continue up in a straight line forever. So we want to find updated supports and resistance levels on the VIX. So for that, I'm going to just move my eyeballs from right to left here and hone in using my 22 plus years of experience on the most important resistance levels first on the chart. So I'm going to just take these existing blue lines and snap them into place. Now, a couple of the techniques that I use to determine these three levels, 2237, 2622, and 2850, are from my Gann trading pattern system, where I look at Gann's actual patterns that he aligned with forecasts. So it's one thing to forecast when the market might get somewhere. It's another to have the trading pattern ready to actually act upon it, right? To sell or buy. As for supports, I'm going to be drawing in new fresh lines. And for that, I'm going to be using pink. And you can see here, I've already dropped one in. So here are the supports that I see on the VIX that are up ahead, meaning these are areas that if the VIX falls to, could hang out for a little bit there, perhaps bounce. But given the speed of the current VIX move, I think that it's at least likely that we get back to the 1912 to 1845 area. So that would be these lows from August and April. And then with my favorite momentum indicator, the RSI power zones, being so oversold, there may be a stabilizing in the VIX if it gets, again, to 1912 to 1845. So I think that's the first thing that's likely to unfold. So that would pair with the market continuing to rise. Now, if instead the VIX rises before it falls again, then I actually have even more specific levels of resistance to monitor along the way. If it gets above 2237, then I think it would be on a good path back towards 2518 to 2622, because also that coincides with this prior rising trend line that has now become a potential resistance. So when you have an old trend line that gets violated, right? It was totally violated here, but useful to monitor this gap, useful for this high here, useful for this low here, and useful for this retest. We don't want to rely on it heavily, but if it coincides with other traded levels that are actual plotted levels, such as this high and this high, then it becomes more usable as a potential resistance zone. So outlook for the VIX to head towards 1912 to 1845 first, but if it happens to rebound, then it would only be clearance above this 2237 that would set the stage for recovery to 2518 to 2622. Catch you on the inside and have a wonderful Thanksgiving holiday.